what you have to do as an entrepreneur is really pursue a vertically integrated solution. The magic happens when sales and engineering are working together without an intermediary. Don't rush into the centralized exchange listing. The only people that benefit are the insiders. I was just shocked with regards to how much money we were spending on compute.
Your business was sustainable in itself, right? Why launch a token? Hey everyone, welcome back to the Nalikes Podcast. I'm Talha Asif, and in each episode, we bring you insightful conversations with the founders and builders in Web3. Our goal here is to educate and inspire you guys who are Web3 founders while showcasing what other successful founders are doing for their projects and startups. Make sure you watch till the end as you will learn practical and actionable steps that you can apply to your projects and startups today. Today's guest is Kenzo, who is the founder of Morphware. Kenzo, welcome to the show.
Hey, thanks for having me.
Amazing. So Kenzo, I got to meet your team in Dubai. I really loved what they were doing. They kept on mentioning sustainable. So that is the word that stick with me. So we'll discuss on Morphware, your journey and everything. But I would like to learn a little bit more about you. Who are you? What is your background? And what led you to start this company?
Sure. So that's a really good question. Well, before this, I was working as a data scientist for Venture Studio. And before that, I was really into smart contract programming, and I taught that a little bit at a variety of places. So my background's kind of both in blockchain and in AI. I know it sounds awfully convenient given the buzziness of all that stuff, but for a long time it wasn't as obvious to go ahead and study those. I think, looking back, it's really funny. I had a lot of colleagues that clowned me for getting both into AI and into blockchain stuff. My coworkers who are programmers, some of them thought, blockchain was the dumbest thing on planet Earth. It was conventional wisdom for a long time that blockchains were stupid, slow databases, and that AI was just a set of overcomplicated conditions or like if statements. So it's funny that now it's kind of buzzy, and the intersection of the two is especially buzzy, but for a long time it wasn't that obvious. So I'd say if I had any wisdom at all to impart on people, I think the beginning of anyone's journey should kind of one be rooted in like your core convictions, but two, I'd say it has a lot to do with bridging your past and your future in a sense. So for me, the story behind Morphware is while I was working as a data scientist and actually at a previous startup that I had co-founded, where we were using reinforcement learning agents in 2018 to try to design AI chips um, on FPGAs, base or what are called field programmable gate arrays, so like reprogrammable hardware. For anyone listening to this that isn't familiar with that jargon. Um, when it comes basically to the story of Morphware, the thing was, well, AWS was supporting us in some capacity. They're their incubator, AWS Activate. This is Morphware. I'm talking about this previous startup. Um, and I was just shocked with regards to how much money we were spending on compute, especially when it came to GPUs. And I started to really dig there. And not while I was working on that previous startup, but when I was working as a data scientist, I really started to dig into basically like the cost structures of our expenditures, right? So what's really interesting about compute is that 65 to 90% of an AI workload is directly related to the price of electricity. So what's interesting there is basically um, that if you can control your costs on the energy side, you can pass on those savings to the consumer if you have a vertically integrated approach. So I would submit that in the age of ChatGPT, like I have a programming background, a pretty I have a so-so, I mean, compared to like the world's best, I'd say I have a so-so software engineering background. Like I'm nothing special. I think every programmer thinks they're pretty good, but and I do too. But I've worked with a bunch of folks who are absolute geniuses, and I've even taught folks that are way smarter than me. Um, so the point is, when it comes basically to this day and age of like AI empowered development, or like what people are calling vibe coding, at least right now in 2025, I'd submit that what you have to do as an entrepreneur is really pursue a vertically integrated solution. So what I mean by that is, since it's so easy to spool up a front end right now, I mean, like when I started programming in like eighth grade. I like cracked open my dad's C textbook and I was like, nope, ain't for me. And I started using Adobe Dreamweaver. Um, like obviously years later, everyone goes back to C, but the point is, I was using Dreamweaver to program websites because I was like, this was in 2005. So I was like, oh, this is like really cool. But like the point is, when I started to learn how to program, if you can call it that, like I'm just talking about like front end stuff, um, you couldn't like you couldn't do like margin auto and CSS. Like you couldn't easily center things. So like now obviously it's like really simple, and like for front end development has obviously come a long way since in the past 20 years. And it's weird looking. It's even weird to say 20 years. Because to me it's like yesterday. But the point I'm getting at is that it's so easy to spool up apps now that I think in order to really get someone to pay for something and to have enough of a flywheel going where you can basically subsidize the development and the sales and the customer acquisition costs of a product that basically has enough growth where you can handle for your churn. Um, I I think it's really imperative for entrepreneurs to pursue vertical, basically much broader in scope than usual, or at least with regards to the past, much broader in scope solutions than would have like previously existed. I think a really good example is like, back in the day, you could raise a crazy amount of money in Northern California with like a database. Like um any of the like say a doc store or a key store, like basically something like an in-memory database, like Redis, or what's another popular one that raised a lot of money that and anyway, like
MongoDB.
I'm sure. Yeah, exactly. MongoDB. That's exactly what I was thinking of. Exactly. So, yeah, exactly. So the point is like now it's like you have to have this like all-in-one solution, and somehow the unit economics have to work out where you're capturing some value and your churn is really low. That's a really good. I feel like well I feel like people overemphasize churn for a really good reason. I think, when I was like kind of getting my sea legs as an entrepreneur a really long time ago with a bunch of like failed ideas that like didn't go anywhere. Um, you always hear on these podcasts and these like founder interviews and these books and these YouTube series about like churn. Everyone's like always hammering the point about churn. Mark and Andreessen, all like the gigabrains in the space are always talking about churn, and I feel like it's not even talked about enough. Because what's interesting is as a statistic, I can't remember what exactly it is, but there's like this threshold of like 95% where like if you look at like if you have churn of basically if you're dropping 5% of your users every month in terms of like your monthly active users over a year, like you're pretty toast. You're not like toast, but you're not, things aren't that good, right? So when it comes basically to achieving product market fit, just reflecting on my own failures or experience, and the modicum of success that Morphware has achieved, I'd submit that, you know, a lot of this, what's weird is the other thing that's really weird is all these founder interviews. I used to be obsessed with like reading everything that Paul Graham wrote. I think I applied to Y Combinator like
Yeah,
7 times.
I
Never
still
got
read his articles.
Yeah, I love it. I bought the book Hackers and Painters. I played to Y Combinator like a million billion times. And what's interesting is, I mean, we never got anywhere with anything. But the point is, he always talked about talking to customers. And for us, Morphware, that's like been a lifesaver because that's how I think you defeat churn. Is you literally just have, in the beginning, at least, like say for Morphware, we had this like product, right? Which we categorize as like a rev tech product, which is really just like um it's a way to help car dealerships and real estate agents close sales. So like long story short, for an apartment listing for a real estate agent, it's all about getting the person to the viewing, to the showing of the place, whether it's like a condo, an apartment, or a house or something like that. For an auto dealership, it's all about going ahead and getting the guy to do a test drive, or at least getting him into the showroom. You have a really high likelihood of success if someone's that far down the funnel, right? In terms of like an inbound marketing lead. So the point I'm getting at is, just speaking again from experience here, and I'm talking specifically about Morpho now. What's interesting is like going out and talking to customers saved us a lot of time and bullshit. Because people, what's interesting is if you build something that's going to help someone either make money or cut costs, I feel like those are the two main things that like, startups do is you're either helping make someone make more money or you're cutting their costs, right? And you're providing direct value. If you go out and you show someone something, I think, like someone who's actually got some deal flow, say like a car dealership, right? The car dealership's already got people hitting them up all the time. Like let's say it's Ford. Like people are calling them every day about their pickup trucks. Like you don't have to do anything to build up Ford's deal flow in a sense, unless you're like some sort of SEO or digital ad agency or something like that. The point is like you can literally tap into some existing business's pipeline and just approaching them being like, let me help you make more money or let me help you cut costs or like whatever, right? And for us, that experience was what was basically it opened a door to a conversation early on, like months ago, where we were like developing this product and we had developed something that they kind of wanted, but they're kind of like, it'd be really cool if you actually did this other thing. And if this other thing was actually really complicated to build, and it took us a really long time. And then what's always frustrating as an entrepreneur is the guy goes, okay, like, yeah, now that you've built this other thing, it'd be great if you built all these other features, and they have this huge list of features. And it may not even be worth it in the beginning to build it for like that one customer. But what's great is I think one way to achieve product market fit is focusing on conversations with people where there's a lot of other types of those customers. So for us, it was like car dealerships, right? Or like auto companies and in countries in South America, where like if you plug into one main dealership network or like the exclusive importer in our sense for a country, um, and you solve their problems by basically going through their features list, like literally throwing it up on a Kanban board and being like, okay, let's break down each one of these features into sprints. It may sound a little corny for like the software developers
Yeah,
out there, but just getting really agile about it, and then just moving those cards across the Kanban board. I think for us,
got it.
in hindsight,
Yeah.
that's kind of like how things came together.
Right. So we'll take a moment because there's a lot to unpack. So if I were to summarize what you discussed in the last 12 minutes, is basically you went against the conventional wisdom. So you were in crypto, blockchain and AIs before it was actually a thing, right? That was the
Hmm.
first thing, right?
Yep.
You have built a couple of startups before, so you are more experienced than most of the guests I've had. So I'll skip past the basic questions. You mentioned that you were using AWS. Funny enough, I also work at AWS. They opened data
Oh,
centers
cool.
here
Oh,
four
cool.
years ago, so I'm well familiar on the cost. So again, my other business is that we have a product studio, so we build products, and most of the infrastructure is on AWS, so we are well aware of the costs as well. So, and you were mentioning AWS cost, and then you mentioned the price of electricity. So, if you can control your cost, then you can sort of control your outcomes. Then you mentioned that for entrepreneurs building solutions, it should be vertically integrated solutions, right?
Hmm.
That's what you mentioned.
Exactly.
And then you mentioned that one thing that has helped you a lot is talking to customers, and you break down everything is that if you, as a startup, can help your customers make money or cut costs, then you should not find it difficult to find product market fit, right?
Mhm.
So yeah, so that was a lot to break down. So go ahead.
No, so I can drill down further. What's really interesting in hindsight is the magic happens when sales and engineering are working together without an intermediary. Because usually what happens is you have this like non-technical product manager come in, and that's like great for big companies where you have an existing product that's really flying, say like Google. Google and Facebook both need a million billion product managers because they don't want to break what's working, which makes total sense. But I think in a startup, it's really important to get sales and engineering working together. But what's problematic there about having opening up that direct conversation line is people get really frustrated at each other, right? Where like engineering feels like engineering is always like right, they're artisans, they're like proud of their work, right? It's like it's not just a craft to them, like they're really putting their heart and soul into a product. So it's understandable that like they don't want to be bossed around, right? Especially by like a bunch of non-technical folks. So what I think is interesting there, and for us, just in hindsight, the turning point for us in terms of productivity was literally just putting together requirement stocks where engineering was like demanding, okay, why don't you guys in sales just go ahead and prioritize a list of features? Because what's annoying is for us to build something, ship it, and for you guys to criticize it to no end. You know what I mean? So what was really great was literally just real simple requirement stock. I know it's like this is like a no-brainer for like people with a big tech background, but in startup land, you kind of lose sight of all of these um no-brainers, if you will. And and again, that was like a real turning point for us in terms of like one, getting sales and engineering working together in a really virtuous cycle, but then yeah, and then basically reaching this breaking point where engineering didn't want to move another keystroke until there was like a really firm requirement stock and basically some sort of like established cadence in terms of like the actual
Like,
overarching work stream.
makes sense. All right. So if you were to explain it to your grandmother or a 5-year-old, what is Morphware? How would
It's
you
a great
explain it?
question. I would say that's a really good question. I would say, one guy that I talked to who's a friend of the project, um, he described Morphware as an energy company. I wouldn't go that far, but what I would say right now is that, well, I'll tell you about the direction we're going because Morphware has like pivoted up a few times over the past 4 years. We originally started out as a GPU aggregator, which is very popular now. But the problem back then that we realized with like the prevalence of like things like ChatGPT starting to spool up was that model parallelization technology would never catch up with on-chip performance improvements, right? So basically, like the point is stitching together a bunch of consumer graphics cards never going to be as good as like an NVIDIA B200, right? So the point I'm really getting at here is what we pivoted to after that. This is back in 2021. After that was literally focusing just on energy, right? Like the idea, like if we can secure energy contracts in the bear market, when the bull market rolls around, we'll be able to go ahead and capture value from the substation up to the application layer, right? Because of the savings we pass on from a vertical integration perspective. The sugar on top there is the renewable aspect, right? So there's a lot of demand from corporates to achieve or maintain some sort of sustainability mandate from a corporate social responsibility perspective. And it does make our international expansion a little bit more complicated, basically expanding to sites where there are data center environments powered by fossil fuels. But the way we're going ahead and basically doing that is one, we do a solar fossil fuel blend, but two, we're also offsetting some calculation of carbon emissions really generously, right, with some sort of like CO2 equivalent calculation of what our carbon footprint may be if we expand to those environments. So
Got it.
I would basically
Right. So,
describe Morphware as a renewably powered currently as a renewably powered um, AI AI play, for lack of a better phrase, because we are pursuing a full stack approach from the substation again to the application layer. However, I think what we're going towards is a carbon neutral AI play, right? Because the unit economics in a lot of environments that are outside of Paraguay are still really enviable. And as a project, we've always planned to grow past Paraguay. And the renewability aspect is something that we do want to maintain. And carbon credits are a way for people to go ahead and do that.
got it. So is it safe to say, and correct me if I'm wrong, that you're powering the compute in crypto through cheap, renewable, and sustainable energy? Is that a simple way to put it, or a very simple way to put it?
Definitely right now, but in the future, we may be expanding to say like, different environments where, we are using petroleum and a variety of fuel mixes, including solar, to go ahead and basically power these data center workloads. So again, like I would basically kind of rephrase it as like carbon neutral because we do plan on basically
Got it.
offsetting the
Makes
carbon footprint with these carbon credits.
makes sense. So, and from what I know, meeting your team is that you guys do mining as well, your own in-house mining, other than allowing
Mhm.
other to use your compute, right? So your business was sustainable in itself, right? Why launch a token? So I want to talk about the token as why did you decide to launch a token? I mean, I know that there is revenue share and all that stuff, but what was your initial thought in launching a token? Because you will agree that most of the projects in crypto don't really need a token, right? They're
Mhm.
purely speculative tokens, and most of the businesses can work without it. So why did you, as Morpher, decided to launch a token and talk about the revenue share model and why others should also look into it? Because I'm not sure you might be familiar that there's this term called fundamental season, where there are actual businesses generating revenue and uh, funneling it back to the tokens. Like there are a lot of projects like EtherFi, Pendle, and so on. And I think your project also falls into that category. So let's talk about that. Why a token? And this revenue and token buybacks, how can others also build on this?
I love that phrase. I've never heard of fundamental season, but big fan of the concept as you explained it. When it comes basically to why we have a token, it's really interesting. If you read the original Morphware white paper, it was about aggregating these GPUs, right? So the idea that was really novel, I think, about our approach back in 2021 was the white paper that I wrote revolved around auctioning off compute. So the cool thing about a Vickrey auction when it comes to algorithmic game theory is that it guarantees non-negative utility. The point is basically what a Vickrey auction being I believe it's a second price auction that a sealed bid second price auction. That's right. So I haven't thought about this concept in a while, but the point of a sealed bid second price auction is basically the way that major government contracts are also auctioned off in RFP processes, and basically it gets people from overstating their utility. Meaning, in let's say in a decentralized GPU network, you have all these different graphics cards, but you don't really know if every node is honest, right? Let's say I'm running things on my computer, like a MacBook, and then basically I'm pretending in that network by basically hacking the desktop app or reverse engineering some sort of part of the byte stream to basically go ahead and say, you know what, I have a NVIDIA H100 card here. So I'm kind of like pretending to have some sort of utility that I don't. What a Victory auction does, long story short, if I was, let's say you have an incoming workload, like a machine learning workload, and you need it to be trained or fine tuned or something like that, there's some sort of computational capacity that basically needs to be performed. What's interesting is that if that person puts a bounty on that workload, and this is on the white paper that I wrote, which is on GitHub, what's interesting is basically in a victory auction, in this sealed bid second price auction, um, each node is guaranteed is encouraged not to lie, because there's, and you can read the code that I originally wrote, which is like a smart contract. It's two smart contracts. There's a job factory for job tracking, and then for resource negotiation, there's what's called the auction factory. So these are factory patterns in Solidity that I wrote that basically spool up a new auction for every incoming machine learning workload, and then one that actually tracks the progress of the training
Mhm.
across basically the node that wins the right to go ahead and train that model. So the
Mm.
token
Isn't
originally,
isn't isn't sorry to cut you, isn't it similar to like, proof of work, where there is a transaction or a problem to be solved and everyone tries to solve it, and whoever solves it the fastest, proof of work, wins the block reward. Isn't it
yeah,
similar?
exactly. It was very it was pretty similar to proof of work, and that's definitely what I was inspired by. And what's interesting is that this whole thing worked. I mean, you can still run the Solidity in Remix or whatever. And the thing is that we really moved away from that. Eventually, as we become more spread out as a project, I think multi-node coordination, or like resource negotiation, as they say in computer science, will become more and more prevalent again. But it's something we've moved away from. So that's the original reason we launched the token, was to aggregate GPUs and to encourage them not to cheat in this really complicated system of training, testing, and validation, which is all like in that white paper, which I'm really happy to discuss. It's been a while since I thought about it, but your question brought me back to it.
Yeah.
And
Right.
and
So
since
so if,
yeah,
so if I were to take a break and understand, like, dumb it down for the audience, is that, let's say there are five nodes on the network, each trying to, and then I, as a user, I come in, okay, I have this request to run this process or language model, and these five nodes would auction to do the job, or all of them would do the job, and like, how would that work, and where does
so
the token come in?
so it's a great question. So let's say you are a data scientist and you want to go ahead and train some model, and you don't have any hardware to do that locally, some sort of really powerful GPU, right? You post it
Hmm.
on our network via this Electron app that we built.
Hmm.
And basically, what that did was it created an auction for that workload. And then there would be an event published in from the smart contract. An event would be published, and all of the nodes listening would go ahead and look internally to do what's called an internal GPU core count. So, and a VRAM count. And there's some approximation. There's an algorithm that we wrote to approximate node strength, relative node strength, right? So basically, an H100 or something like that would be rated stronger in some rating system than, say, like a 3060 Ti Founders Edition card, right? And then basically, each node would bid in Morphware token. And then basically, the way that it works is, what you would do as a data scientist is you would actually post a bounty, like how much that training process was worth to you. And then the worker node, the GPU node, believe it or not, would post, they would post Morphware token into the same smart contract automatically via an escrow mechanism. So basically, in the smart
And
contract,
and
it would
and how
hold.
how 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 would these nodes already have the tokens? Like, the person or the company running these nodes would fund it with the Morpho token
Yeah, so
beforehand?
this is assuming everyone in the network has Morphware token, some wallet with
Okay,
Morphware token connected to this desktop app.
okay, okay.
So, and now that I'm talking to you about this, it's funny. I'm like thinking like, man, we should like really like go back and like revisit some of that stuff, because
Yeah.
I feel like we were really pioneers in this space. If you really like go back on GitHub and look at it, it's all public. It's really interesting. It's on the daemon and service branch. But here's what's really cool. Basically, not branch, but in the repos. But you would post a bounty with the workload, and it would have some
Okay,
description of basically the
okay,
workload, which you key into this desktop app. And we have like this demo of
okay.
it, which I can have one of my team members share. So it's floating somewhere around YouTube. But Long story short, then the worker node, if I recall correctly, would also post Morphware token to that smart contract. And then they would, let's say they did a good job. What they would do, and this is all via BitTorrent, by the way, your model, let's say your model would be shared as a Jupyter notebook along with the data. So what I mean by the data is the training data, the testing data, and the validation data, or like the unseen data, right? These would all be seeded on BitTorrent. So this is like a really cool part of the project. Um, so, and this was back in 2021, and it's crazy thinking about it now, but this is how it worked. So all these would be seeded on BitTorrent, but only the magnet link, basically the URI on the BitTorrent network of the training data would be posted to the job contract, the job factory contract, or the job instance that was created by the job factory. And then basically the say the worker node that won the auction would actually go ahead and it would submit an H5 file. It would post an H5 file to BitTorrent. And you could encrypt all this, by the way, in between the worker node and the data scientist via really simple public-private key encryption stuff related to like Ethereum keys.
Okay.
But long story short, here's what's really cool, like privacy aside. The GPU node would go ahead and publish the H5 file. The H5 file is just the array of weights and the model architecture, right? So as a byte stream. So then that H5 file would be posted back via BitTorrent, not to the data scientist, but to a collection of other nodes on the Morphware network, which don't have to be GPU enabled. They can just be CPU enabled. So those CPU nodes, which can be like a cell phone, a tablet, or like a laptop, or a GPU node, those go ahead and run the H5 file against the the testing data, which has been previously unseen. So the idea is that once the GPU node posted that they completed the training process to some level of accuracy on the training data, your node, the data scientist node, would go ahead and share the magnet link to the testing data that was already previously seeded on the BitTorrent network, right? Which is this random long hash. It's like super duper long hash. And or not, maybe it's not a hash, but it's just a magnet link, right? It's something like a hash. And then basically, long story short, then the validation nodes go ahead and they pick up that previously unseen data, right? So there's obviously like a test train split component that we never got around to in that early MVP, where there's like an automatic test train split of the data. Actually, we may have gone to that, but like the point is, Morphware token originally was
Was
invented to coordinate this whole process where there's all these tokens going back and forth. And back back then, if I recall correctly, and I could be completely wrong about this, but wrapped ETH wasn't as like widely accepted as a concept as it or like wrapped Bitcoin or wrapped ETH. This idea of like wrapping things, it was still kind of like prevalent, but it was still a little shaky for some reason. I can't remember what it was. But there's this other thing where, and I know that in Solidity, like dot transfer from the method, is shaky, is considered like shaky. So there's all these like different ways of basically replacing transfer from, which we ended up doing like later on back in 2021. But the point is that, since you can't actually access ETH on Ethereum in like the same way that you can access like tokens that like right on top of Ethereum, you know what I mean? Like it's why like say like everything on like DEX screeners is like wrapped with like is paired with wrapped ETH instead of just ETH. Like long story short, that's why we created Morpho token, because you could
okay.
basically go ahead and do all these operations on the token that you couldn't on ETH at the time, if I recall correctly. um or in ways that it wasn't like widely accepted, say like with like wrapped ETH and like all this different stuff. um and uh and yeah, that's basically why we invented Morpho token.
Okay. Very interesting. A lot of technical terms. But if I were to simplify, users would buy these tokens to get their compute done because it was cheaper as compared to the other options where AWS, GCP, Azure, correct?
Yep.
That's why customers would use your product. And then
Yep.
these nodes who would do the compute would do it because they have excess compute capacity and they can earn from that.
Yep.
That's it, right? That summarizes it very well. Now let's talk about, yeah, go ahead.
No, what I was going to say was the thing is now it was much more, from a business perspective, it was literally much more profitable to go ahead and focus on developing products that people really wanted to use. So the problem with our network, honestly, going back to 2021, is data scientists didn't really want to use it. We had lots of like conversations with data scientists where we were like, hey, we could lower your compute. You just have to put it on this decentralized network. And they would go like, well, what about the privacy concerns? What about this and that? Blah, blah, blah. We would have all these good explanations for the different things we were doing. But long story short, we weren't really getting traction. And there were much more, like over the years and in hindsight, there were much more popular products that we felt like we were just like, man, why don't we just go build this thing that people want us to build after having conversations with customers? You know what I mean? So we ended up focusing on that. And that's why a lot of this kind of like really cool blockchain stuff was kind of put on the back burner.
Makes sense, right? So, and again, that's a part of being a startup founder. You keep pivoting until you get validation from the market. Now, I want to talk about your token generation event because I did speak with your team because
Hmm.
that's, I think, a question in a lot of founders' mind that, okay, once I have a working product and once I have an actual use case for a token, how do I do it in the right way? So, how did you guys do it in the token generation, your TGE? I think it was back in November or before that. And how were you able to reach almost 100 million market cap? And then my follow-up question on that would be, how do you, as a founder or leader of the project, face the responsibility or the pressure of, sitting in such a big market cap and a lot of customers and community members have expectations? So walk me through that. I know it's a handful, but I would like to understand
No,
all of these things.
it's a great question. Honestly, we were really ready for it. So what I mean by that is first of all, the project has been around since 2021, right? So back in 2022, in early 2022, I decided to really pursue the energy angle by like literally uprooting myself and moving to Paraguay because I literally Googled, like, this is gonna sound so stupid, but this is literally what happened. I Googled one night where like cheapest energy by country, and up came a Wikipedia article, and it was a simple table. And it was like cheapest, it was called something like cheapest electricity by country. It was on Wikipedia. And there was like this ranking, and there were like a few countries, and I was just like, you know what? And then one of them was Paraguay. And I was like, oh shit, I know some people in Paraguay, and I'd actually been to Paraguay before. And I was like, huh, maybe I'll go down there and get cheap electricity. And it was like a lot hard because, it turns out that like if you want to buy wholesale electricity and you like walk into an electricity company that's like state run, in some country, like you can't just like go there and be like, hey, I want electricity. Like there's all this like formal, it's a super formal process that can take years, and it did. So what's interesting is, one, we had a lot of skin in the game, right? And there was a community very early on that was focusing on us. Um, and I can't say enough good things about them. Some of them ended up actually joining our team in a really significant way. And these are people that saw the project from its infancy and have been tracking it the entire time. And when it comes basically to the specifics of the launch, something that really helped was that we had some really strong convictions, especially me, about the rate cut. So on September 18th, there was this FOMC meeting, and I was really confident that the Fed would make a 50 basis point cut. I talked about this. You can go back in our Telegram community right before our launch. I was just like, and 99, by the way, 99% of Wall Street, you can look at the tables in something called, like, I forget what it is, but it's like Fed data or something like that. It's from like the US Federal Reserve, but they poll traders on Wall Street and in Chicago on like the CME or something. And everyone was expecting like 0 to 25 basis points as a cut. And I was like, nope, it's going to be 50. And for a lot of different reasons. And you can go back in the Telegram and see. Um, and and we were right. And this was a big shock to everyone. So the significance of that for anyone watching this, that isn't basically into all this FOMC stuff, is that money had become cheaper very quickly, right? So from a capital velocity perspective, what's really interesting is what I told my team was, hey, if the Fed, um, and we were literally like up until the launch, like working on the contract, working on the socials, like it was just like peak startup mode. Everyone was on a group call. Um, and it wasn't like a last minute thing, but it was something where like the tempo had really picked up. Then I told everyone, I was like, listen, if the Fed drops, if there's a 50 basis point cut, basically, we're going to launch. We're going to launch it like right after the announcement. And lo and behold, like a couple hours later, we did it. And I think, and here's what's really interesting also, just like as a random, actually not as a random thing, but something that's directly related to our TG event. We got some really good advice from one of our advisors, Bob the Rebuilt on Twitter. He was like, you guys should launch really low, like absurdly low. And I mean, I'm talking, and we launched, by the way, with like a $50,000 market cap, I think. We put in like something like 12 ETH or 10 ETH into a pool with 50%. I think it was like 50% of our supply or something, or was it 50% or 60%? It was some outrageous number, right? And for me as a founder that had been working on this thing for 4 years, and where everyone I knew was telling me, do not launch right now, right? I had a couple people in the project that were supportive of this idea, but most people were like, you are being a complete dumbass. Do not launch right now. This is the worst idea ever. You're throwing everything away. What the fuck are you doing? Right? And it worked out because basically what happened was a lot of people piled in because they were like, this is kind of wait a minute, this is a no-brainer. And then people were like, it's really funny if you go back to like the early kind of like launch period, because there were a lot of people in our Telegram chat. I'm sure you can see this if you scroll up. There were a lot of people that were like, wait, this project hasn't been around for 4 years. They were like doubting everything that we were saying. People were like, there were all these conspiracy theories. Like, they were like, this guy's not Japanese. This project hasn't been around for 4 years. They were like the most wild conspiracy theories that you can think of. And it wasn't even people trying to FUD. They just couldn't believe that like this project had launched with such an insanely low market cap and FTV. Because that's the other thing, right? But we were getting so much different advice at the time, and in hindsight, what we knew wasn't going to work was if we went the traditional route, because all these coins that were going the traditional route were failing. The traditional route being Launchpad, LBP, um, centralized exchange listing, right? This kind of like almost work stream, or kind of whatever you want to call it, this launch process, if you will, um, just wasn't. It was not what's up. We realized that like that was not going to work, right? Because what happens in that process is the launch pad has like all these fucking stupid rules, right? And they have like their cronies, right? And then basically what happens is, actually, I can't say anything bad about the LBPs, like say Fjord and them, like great guys, blah, 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 all this different stuff. We ended up not going that route. But the point is, then basically you have this kind of like strategic round, you know what I mean? Where like basically all the KOLs pile in, and then you're supposed to go into a centralized exchange listing. But what's broken about that model is actually at the back. So if you look backwards, here's the point. Any token that is launched, or I would challenge anyone to find any token that's launched on a centralized exchange listing in the past, I don't know, 9 months, that has been absolutely wrecked. Because what happens at the very end of this process with the centralized exchange listing and working backwards is the perp launch. So the minute they open up perp trading on the centralized exchange listing, everyone piles into the shorts. And you're trading at that point against very well-informed traders, possibly market makers who are even working against you, right? If you provide some sort of single-sided liquidity into that exchange. And also, if you don't have the capital to fight it with your own market maker when you're on a centralized exchange, it's just like a really easy way to get clapped. These guys have infinite leverage, infinite liquidity. There are all sorts of shenanigans that occur in that end game, and it's a very, 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 very hard game to play without an enormous amount of capital. So my recommendation to any founder or potential founder watching this would be do don't rush into the centralized exchange listing. The only people that benefit are the insiders. But when you think about it, and I know this from talking to other founders and advisors and different things like that, the crazy thing is that the only people that make out at the very end are the exchanges and the market makers. Because what happens is before you go onto one of these exchanges with a reputable market maker, is you sign what's called a call option contract, right? Or a call option loan. And like the thing is, that puts an upper limit, believe it or not, on your token price. Long story short, the reason that is because you will owe the market maker, or the market maker will owe you rather, a lot of money if you go ahead and have a really successful centralized exchange listing. So if your token pumps on that centralized exchange, the market maker literally has to pay you usually millions of dollars per day, which is untenable, right? These market makers aren't in the business of handing out millions of dollars. They're like they're like in the exact opposite business, right? So the thing is, the minute perps trading launches, there's so much pressure. And the thing is, the perps trading has to launch the minute there are multiple centralized exchange listings. The only reason people push centralized exchange listings is because they want to dump on the community, just like straight up. That's exactly what's going on. It's like team wants to sell their tokens, but they don't want to do it on chain because if they do, their community is going to find out about it and they're going to be outraged. So what's going on there is like it's just like, and the thing is that what's weird is the team ends up getting fucked over anyway too because the value of their bag drops precipitously along with the token price. So they're not even happy in the end. And then like it's like this crazy like whirlwind of bullshit at like the very end of like these token like life cycles basically. Working backwards, it all starts initially with that launch. So what I would submit,
And
I mean, I'm a big fan, and this is gonna so this is I'm a big fan of the way we launched. And again, I'm just one guy. I'm just some random guy on the internet that's just like talking about his experiences in the crypto world. But I've been in the industry for 10 years. I've taught these concepts in a technical and non-technical capacity in a at a couple interesting places. And again, this is the kind of the distillation of all of my observations, right? And I would
got it.
submit that it's hard to find counterexamples, right? It's hard to
Yeah.
find like a bunch of tokens that have launched on centralized exchanges that have crushed it.
Yeah, and I completely agree. And I was reading this article and watching these videos where this is like how a normal cycle goes. When a founder decides to do a TGE, there are first probably VCs or people who get in, and then there are these centralized exchanges, and then when it gets to the community, they become the exit liquidity or like yeah. So
Exactly.
yeah, so if I were to summarize, you guys launched on a low market cap, low FDV. You guys ignored the conventional approach of uh, going with centralized exchanges, and you just launched it. And I think it was the timing as well in your case, which is the rate cuts of 50 basis points. So and basically it was timing, community, and utility. If I were to summarize, and your token is doing very well. So I've been keeping track since I met Sebastian and the rest of the team.
Hmm.
It hit 100 million market cap, I think, 2 days ago. I did not check today. How does it feel? The pressure. Do you feel a lot of pressure in order to deliver, or how do you handle that as a person Because if it was a company sitting at 100 million market cap, that's different if it's not a public company. But right now you have so many stakeholders with different expectations. Some might try be in your favor, or some might not be in your favor. How do you go about it and on day-to-day basis, focus on building rather than this noise trying to distract you? And at the same time, expectations, right?
I love it, man. I love the pressure. I
I
wasn't like
love
some
it.
great
Yeah.
athlete, but I ended up playing like I played ball in college at the D2 level.
Hmm.
And I think you got to think about it like an athlete. You just got to like block everything else out. And, if you make a mistake, you just got to pick yourself back up and just like get your head back in the game. And I think you just really got to treat it like sports. You just got to basically like do your best, um, find a bunch of great folks who you want to work with that you're really excited to work with every day. And I think sticking to your core convictions and growing the community without losing the soul, is 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 something that helps you go to sleep at night, and it helps you kind of just be energized when you wake up in the morning. But as a founder, I think I mean I would kind of flip the script here. I would say like who wouldn't be excited, right? If like their token or their market cap was at like 100 million or 80 million or whatever it is right now. I think that I find it really exciting. There is a lot of pressure because you do get a lot of different pieces of advice. But I think what you have to do is kind of. I got this piece of advice once from, I can't remember, but it's some really successful guy who had told me this. He said, you have to anticipate your regrets, right? So
Interesting.
like, yeah, yeah. It's kind of like there's this concept that they teach. I didn't go to business school, but this concept they teach in business school that I learned about called a project pre-mortem, not a post-mortem, but a pre-mortem. It's like the idea is like, let's say we're going to go build an apartment building. The post-mortem, which is kind of normal, say in any sort of project management, is like if something gets fucked up, we figure out what happened, right? And we figure out almost like someone to blame or something like that, which is kind of like a really unhelpful process because it's kind of like, well, the project failed, right? The idea of a project pre-mortem is you try to guess all the different stuff that's going to go wrong and then kind of like handle for it, right? Like when you're walking out of your door or when you're walking out of your apartment or whatever, and right before you leave and close the door, the idea is like, at least what I do is I think wallet, cell phone, keys, right? That's like a little almost like mnemonic that I have in my brain where it's just like boom, I just check my pockets, wallet, cell phone, keys. So one, there's like power and checklist, but two, like in a broader sense, um,
It's very
you
funny
know,
you mentioned this because growing up, I grew up with a survival mindset.
mhm.
So, and my co-founders who grew up in a different environment. So I always look at the things that could go wrong. So, and that has been very helpful. And I agree with this approach.
Yeah.
So the pre-mortem, very interesting.
Yeah, yeah, it's funny. I think it's not. I'm not gonna lie, it's tough. It's definitely stressful in the beginning, but I think part of it is I don't know. I think part of it is also when I just think about kind of like our experience here. You have to kind of be confident in your ability to make decisions, but I think you also have to have a really pretty substantial level of humility to go ahead and one, admit what you're wrong, two, work with people you don't like, especially like, once you start achieving some modicum of success, there's a lot of different types of feedback you're going to get and a lot of it's going to be unsolicited advice. Like someone's going to come up to you, like this would happen to us. There were a lot of people that came up to me and they were like, you're doing this wrong. Some of them were wrong, but a lot of them were really right. And some of those guys, I regret telling to fuck off and being like, you know what, like, we know what we're doing. Like, yeah, I never heard of you, pal. Go, kick rocks. But some of those guys are like big advisors to our project now because, like, it turns out they challenged us, and it turns out they were actually right. It's really interesting. So I'd submit that,
Yeah.
yeah, that takes a level of humility, but it takes a willingness to kind of map things out and know where your core convictions are. And I think Mark Andreessen said, who I'm a big fan of, he said, you have to have strong opinions held weakly.
Yeah,
Yeah.
I,
So I like
I
that.
heard that. That's very
Mhm.
interesting. Right. So, so basically, if we were to summarize, you love the pressure. You think like an athlete, a lot of humility, and you said this. You reversed the question: is that why not wake up excited and go to bed excited when your project is sitting at such a market cap? Awesome. So now let's talk about the fundamental season, the concept that I brought in earlier. How are you guys generating revenue first? I'm pretty sure you might have explained this in other interviews as well. So we'll keep it short. Like, is your project generating revenue, and how often you are tying it back to the token? And another question is that doesn't it become a security, and how are you avoiding that?
That's a great question. So let's start backwards with the security stuff. I think that we are in a completely different market regime with regards to regulations, right? The new SEC chair said he wants to make a very friendly regulatory environment. But like on top of that, when you just take a real step back and zoom out, the president of the United States has a token,
Yeah.
right? And it's just like, I mean, I'm like for me, I'm like, when people talk about the regulatory environment, I'm like, what are we talking about, dude? This guy launched his own token. I'm like, we're in good company, you know. And I think it's what people don't appreciate when it comes to regulations is this: the crypto industry, a $2.9 trillion industry, had an enormous impact on getting the most powerful person in the world elected, right? The crypto industry mobilized, lobbied, and really made a case on social media, right? Really evangelized the idea of the power of custodianship, of digital currencies, you know, the idea of, the potential, or kind of like just the imagination to be able to envision like a borderless world, or an increasingly borderless world, right? Where like, I mean, like if I send a wire and I'm paying $32, and then the person receiving it is paying $32, probably like an international one, and it takes a million years. It's like insane to think that like you could send something on Solana for like a fraction of a penny and it's instant. Just like it's mind-boggling that like TradFi hasn't caught up to this. So when it comes to the regulatory stuff, I'd submit that we're in like complete blue skies. I think that like the sky's the limit here. And I'd submit that like now that these institutional players, BlackRock, VanEck, Goldman Sachs, I mean, you name it, any of these folks that were literally on stage at Token talking about this stuff, I think the world's only going to become increasingly financialized via tokenization, right? I think that these folks see the power of faster trade settlements, faster securitization of real world assets, and all this other stuff. I think the world's going to become increasingly tokenized in this administration, which gives us at least another 3 years. So, would you remind me of like the other kind of parts of the
Yeah.
question from the
So
earlier part?
so 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 the first one was that your project is generating revenue and you are funneling it back to the token holders. How are you doing that, and how are those buybacks taking place? Is it enforced in a smart contract? Is it manual? How often does it happen? Because as a community member or as an investor, these are the things that I look for. And as a founder as well, I would like to understand, and all the other founders watching is that how can they implement this stuff, and how have you been able to do it?
Yeah, so that's a really good question. So, um, when it comes to the value accrual system, basically that's where Bitcoin mining comes in. So, real quick, when you purchase a wholesale amount of electricity, which is a contractual relationship, what's called a power purchase agreement, a power purchase agreement is a stepwise function. It's not linear. So the point is, you can't go ahead and purchase 1.25 megawatts, or 2.5 megawatts, or 3.75 megawatts. It's usually 1, 2, 3, and so on. So the idea is that if I'm a large energy consumer on the AI front, I'm still paying for the electricity that I don't use. So what we do is we fill in that gap with Bitcoin mining. That Bitcoin goes ahead and is entered into the value accrual system manually, where we change it into ETH, and then we buy Morphware token back. So right now it's largely manual, and here's an interesting little tidbit for like any founders watching or things like that, and even for the community. So when it comes to buybacks, something that we learned is you can't underestimate the amount of front running that occurs. So what's really corny about doing, say, like a large scale buyback, like we did a 1 BTC buyback a couple months ago where we had mined an entire Bitcoin, and it was like, bup, 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 bup. Everyone was really excited about it. And then a lot of people sold the rip, right? Because everyone was kind of expecting this large green candle, and then it went back down. We were doing that largely as an experiment and to kind of like prove what we kind of jokingly refer to as like the power of the Death Star. It's like we just had to do it once, just like one giant, that the in the Death Star there's the super laser, so which is green. So it's like one green. We had to shoot the green laser once, just so everyone could go ahead and see it. Now we've broken up the buyback into much smaller units. We've done everything from 12K to last night we did a 50K or 51K buyback, basically like a zero point 0.5 BTC buyback. Um, I think that buybacks are something that we're still, and I think the industry actually, in terms of like the broader utility space or the fundamental space as you referred to. I think it's something that's still being perfected. I don't think anyone's necessarily got it yet. I think if you do
Yeah.
it too high frequency, meaning let's say you split up one Bitcoin over the course of a month, so every day you're doing like $3,000 or like $3,300 buybacks. I think it's a little lame for the community because they're kind of like, well, it's not really that exciting, right? While you're kind of like spooling
Exactly.
up your operation. So you do want to basically one capture momentum, but also alternatively, there are psychological thresholds in the chart that you want to defend. Like what's really interesting is there's a lot of what in finance people call round number bias in crypto, meaning like
Yeah.
people are always like, man, if we could just get to like 10 cents, if we could just get to $1, right? Like you understand. So what's interesting is like these psychological thresholds are very important in terms of momentum because that momentum is predicated on social media sentiment, right?
Exactly.
Meaning I get whenever the price now falls below 10 cents, I get a million DMs from the same folks that are like, bro, we lost 10 cents. What are you gonna do? And it's like really funny because it's purely psychological, and some of it has to do with covariance with ETH, right? Like our underlying base pair. But yeah, that's basically my thoughts on the
Uh,
value accrual
I,
system.
I, I, Very interesting. I think, the two other projects that I've known about is Hyperliquid. Hyperliquid, I'm pretty sure you know about it. The way they do
Sure.
is that 50% of their revenue, so they have a fixed depending on whatever volume it is. Another project is Ethify, which does 5% of its revenue. So this is, again, like I said, it's a new space. Everyone is trying to figure it out. No one has done it. But yeah, interesting. All right, cool. So now that covers the token, the revenue, and the buybacks. I want to talk about team because as a founder, if you want to build something meaningful, you need to gather people around, and it's not always easy to gather people around and obviously work with them because again, everyone is different. But I met most of your team; they were very interesting people, and they had this energy. I don't know where it come from. Maybe from you, or I don't know. It's like from where it come from. So I want to ask, how are you able to build a team of smart people around you with coming from different backgrounds, different countries, different skill set, and how have you been able to keep that passion or the motivation, kept to build in this space? Obviously, you mentioned for you it's internal, right? But how have you been able to communicate in your team? First, talk about how did you build the team, and what are your advice for other founders that are building, and how do you keep that passion alive?
Okay, two things. That's a really good question. So there's a great book which I highly recommend called The E Myth, E being standing for entrepreneur. And it was written by a guy who's, I think he was a successful VC in Silicon Valley in the 80s. Anyway, he wrote this seminal book on basically the structure of a startup. And so I recommend that book, and I also recommend the Art of the Start by Guy Kawasaki. So he was the first marketing head of Apple that worked directly for Steve Jobs, right? And that book is really about kind of like startup land, everything from like what's the structure of a proper pitch deck to how do you go out and raise money in the traditional sense on like Sand Hill Road. Coming back to the E-Myth idea though, he really breaks down a company. He's like, all right, this is what you need: marketing, operations, finance. Within marketing, there's advertising and sales. Within operations, there's customer service, operations, or production. Sorry, there's production and let's see, facilities management. So operations is again customer service, production, facilities management. Finance is accounts receivable and accounts payable. And he's like, if you've got that covered, you're a startup, right? I mean, like a proper organization and all that stuff. And a lot of
What
times early on, I mean, I
what
was
about
wearing,
what
sorry,
about product? What about product? Where does that go? In operations?
production. Yeah, in production.
Okay,
And then
got
sometimes
it.
facilities management. So like basically like for us, and there's a lot of overlap in these different roles and responsibilities. In the beginning, say like as a founder, right? I was a solo founder. There's a lot of hat where you're wearing all the hats in the beginning, which is really like annoying because what he talks about in the book too is there's the technician hat, the entrepreneur hat, and I think the manager hat. I can't remember what the hats are, but there's like another dimension basically to this kind of tree-based model of the organization. So when I hire, I think about who's running operations, who's running marketing, who's running finance, and then within those pods, who's running the sub pods, like who's running facilities management, who's doing production. And it's just again a framework for what an organization might look like. When it comes to energy, and kind of like the spirit of the team, for lack of a better phrase, a great book is called Creating the High Performance Team. That book goes into this idea that every startup or every company has to be aligned on purpose around a shared vision, right? And it's this concept of synergy. And it's a really old book, but to me, it was absolutely mind blowing. And it's been required reading at many, many, many high performance companies. Uh,
What's it called?
so
What's the book called?
creating the high performance team,
Hmm.
and it's all again about being aligned on purpose around a shared vision. That's kind of like the summary of the book. So, and it's an incredible book. I highly recommend it. So when it comes to basically maintaining that sense of team, for lack of a better phrase, that spirit, I think what's important is reflecting on this idea that Reed Hastings actually gave, I think, at startup school in a lecture, which I watched online on, I think, on YouTube, which he gave at Stanford, where I think he taught, and I could be wrong, but it was Reed Hastings from Netflix. He said you have to think of a startup as a sports team and not a family, right? I think it's really worth going for everyone watching this to go ahead and like watch that clip where Reed Hastings is basically saying like, you know, small businesses are always saying like we're a family, like we, da 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 da, and all this different stuff. But I think me personally, nothing could be further from the truth, right? It's really you have to look at it like a sports team, and every single role, say like on a sports team, you want the best person at that role, right? And not everyone is on a sports team forever, right? When I was young, when I was in high school, the New York Giants had Eli Manning, Plaxico Burress, Jeremy Shockey at one point. I think Amani Toomer, anyway, Antonio Pierce, this linebacker. They had all these great athletes. None of them are on the New York Giants anymore, right? Because it was like 10 years ago. The point is, like, I think at a startup, they say one, you have to fire fast. Two, you as the CEO, you always have to be recruiting, right? Like the main job of a CEO or founder, I think, is to find talented people and empower them by finding resources and allocating them. So I'd submit that basically that's how you go ahead and maintain like a sense of team, for lack of a better phrase.
I agree. I actually watched that clip from Reed Hastings is that whoever does not perform gets benched. And
Yeah.
I also have implemented that in my company. Amazing. Lots of interesting things we talked about. I know there's a lot to cover, but we're short on time. Just before we wrap up, I want to ask what's the future of Morphware and what can people expect as the community, investors, and other builders, and how are you, look like what's the future of Morphware before we wrap up?
My last favorite book, with related to startups, I think I can't remember what it is, and I gave it to a kid who was asking me for advice once at a meetup a really long time ago. I believe it was called Tempo, though. So the author's really interesting. Can't remember what his name is right now, but fascinating book. But I think what's important with Morpho right now is that we maintain our tempo. We're growing really fast. We're announcing new customers every single day. We're adding features to our product, and we're upselling our customer into different product lines, like products that are still being built in the sense that we have them locked in on like one product. We have this enterprise flagship product. They're not ready to go ahead and turn and adopt yet, but we're building kind of like intermediate products along the way. So I think that it's important again to maintain momentum on the product development front, on the business development front, and on the Bitcoin mining front. So that's where the future of the product and then the project.
Amazing. All right. Kenzo, thank you so much for your time. I learned a lot and I was able to get most of my questions in, but probably I'm pretty sure down the line we will speak again when Morpho is 10 times bigger. Thank you so much. I'll add all the links in the description. And yeah, you want to say anything before we wrap up?
No, thanks so much for having me, and looking forward to continuing the conversation on the next call.
Amazing. And thank you so much for watching. With that, we'll wrap up and see you in the next episode.